Hi folks, Lee Gettess here with the Market Sense for the week of April 17th, 2018. That is tax day, and I am so sorry to say that. The charts we use in this presentation are provided to us by Gettess, their trade navigator software, which I use on a daily basis. And we're looking at a weekly bond market chart here, and as we've been discussing, bonds have made a little bottom and have been meandering up. No big authority here flying up, but they've been working their way higher with the logical target of the lows of the congestion area from last year. That's one way to look at it. The other way to look at it is we have these two, well, one exhaustion bar and one almost exhaustion bar that closed below the lower Keltner channels. Now, when that happens, when you get a market that trends strong enough to do that, the most likely scenario there is for them to rally back up to the middle moving average, which they have done, and sort of kind of are turning back down from there. So this is a very interesting time for bonds here, I think. Decision making for how they behave over the next couple months probably occurring here. The turn down from here makes perfectly good sense, but they do appear to be holding the support this week. That would be roughly the 144, it's actually 144.22 and the low is 144.21 so far. So that looks like a pretty good hold there to potentially drive them back up. Now they do have resistance. The middle moving average here is 145.27, I believe. So they could be holding in that area, and that would send them down. And look, there's a possibility that they won't just test this low, but rather they'll have another leg down. But at the same time, we've got good resistance up here near 147 that holding this support suggests they might go to. And of course, we're still looking at the potential for them to reach the 148 area where these lows are. Now, if they're really excited, I mean, the Fed is talking about raising rates 2 or 3 more times this year, which is supposed to drive bonds down, but bonds have a mind of their own. If they do hold this support and start up with some authority, they could be up here to the upper Keltner channel, up above 151 here. That's actually a very real possibility. I wouldn't rule that out. So, it's kind of bizarre. Anything could happen here, but they're kind of at a critical juncture. It'll be fun to see how they behave here. Stocks are in a much different situation. This bar back here where they made the low, not truly an exhaustion bar, but it is a big old bar. And as I've been saying for weeks now, when they make a spike low like this, they tend to come back and test it. Now, they had an exhaustion bar here, which didn't look like a test to me, but they still haven't really got close to it. That's 18, 19 points above it here. If that's it, if that's all the testing they can do, boy, they could be to new highs fairly soon. That doesn't mean if that's all the testing they do, they will go to new highs, but they certainly could be. And this week we were looking for support to come down here in the 26, 31, 32 area, right by the middle moving average. Well, clearly they haven't been anywhere near that. And resistance around 26.90 has provided no problem so far. They're just working their way higher. This would suggest that they want to target these highs above 28 here as the next upside target, although, I have to say, I don't really understand what's driving them to go up so strongly so far this week. So, the 2750 area, anywhere here, kind of like in the middle here, wouldn't surprise me if they just kind of stall out in the middle of nowhere. But at this point, I think they look fairly strong in if I was betting whether they'd take out the lows or take out the highs, they look a lot more likely to take out the highs. So that's what we've got for you today. I hope you can find something profitable to get yourself into.